We put out a report earlier in the COVID period estimating that global losses for the insurance industry around the pandemic would be about $100 billion for the year. We expect at Lloyd's to be paying by the end of the year about £5 billion in gross claims for COVID-related events. And that's why you see the net number of £2.4 billion in our first half results. So there is more to come in the second half, and it is a very significant event for the market, just as it's a very significant event for our customers around the world.
A little story. I went to my dentist's on Monday, and while he was prodding around in my mouth, he was regaling me with tales about his own insurance and concerns that it didn't cover him, even though he thought the 20 specified infections and diseases on the policy were ultimately a cover-all for any disease. And of course, nobody had heard of COVID-19 before the beginning of 2020. Is the industry trying to wriggle out of its responsibilities at this point, Bruce? Why has it come to the High Court, and what does it ultimately mean for the faith that people have, companies have, my dentist has, in the insurance policies of the future?
Well, I think this is a challenging issue for the industry, and you're right to call it out. Where pandemic and notifiable diseases are specifically covered in insurance policies, then they will pay, and we've been paying claims on those. But they're typically bought as an extension to a standard policy that requires physical damage to a premises before a claim can be made. And it's that second category that is proving complex around the issue of whether COVID-19 is creating physical damage in the workplace. And that's the issue that's being tested in the High Court, and we're very supportive of getting this to an early decision. In fact, it's not a big issue for Lloyd's. We have a very small share of business interruption insurance in the United Kingdom, a much bigger share in the United States. But nevertheless, it is an issue of confidence for customers, and we need to get to resolution on this as quickly as possible.
Bruce, if I may, I'm going to move on from Jeff's cavity to talk about that magnificent building behind you, Richard Rogers Building. I love the city, as you know, and I love your building. I just don't see the point of your building anymore. You've done a magnificent job, Lloyd's of London, over the COVID period in basically having seamless insurance for many people. Technology worked by and large. The phones worked by and large. Why on earth do we still need slipcases and underwriters when the costs associated with the physical presence of the building is quite frankly magnificent compared to what some of your rivals are doing?
Well, it's actually a great pleasure to be speaking to you directly from the underwriting room today. We reopened it last week, and business is coming back into the underwriting room. So there is clearly demand for the physical space, but this, as you rightly identify, has been complemented by digital trading platforms that have worked very well for us through the period of the lockdown. And increasingly the room will be both a physical and a virtual space in the way that people work. But in the complex negotiation of really very complex risks, it's unsurprising that people would want to get together. And as you know, the Lloyd's market is substantially a syndicated market, which means that risk is shared across many underwriters. And the ability to do that efficiently, physically, is actually substantially competitive with doing things virtually. But as you know, underpinning everything we're doing at Lloyd's is to try to make ourselves much more digital in our response to business opportunities around the world. And that is only continuing. But the physical setup continues to have relevance for our market, and I think will for some time to come.